Hey fam, welcome to the episode of Good, Bad, and Ugly about real estate. Have you ever asked yourself the question, if you ever got to the point where you were missing your mortgage payments and you're like, what do I do? What are my options? Hey, are you an investor who's like, how do I find foreclosures and how can I help people that are going through this process? Well, my next guest does exactly that on a daily basis. He finds people that are going through foreclosure and he helps them and helps them get back on their feet, whether it's stay in the house or at least protects their credit. But I don't want to take any of his thunder, so please help me welcome to the stage my friend Tasheen.
Hey, my guy, how are you?
Hold on. There we go. There we go. Woo!
Thank you, thank you.
I'm sorry, man. When you're a one man show, sometimes technology does not want to work, and I was bound and determined to have it go for you.
I definitely can understand that, man. I've been on one man show before, so I understand, man. Thank you for having me.
Thank you for making time of your busy day. I like to start my show with having my guests share their journey. So, can you share your journey with us? How you started off and got into real estate?
Man, I started off in real estate, one like everybody else, just wishing I was in it and looking for an opportunity to not have to work for somebody else and being able to make my own decisions. Uh, spent some money to jump into a bunch of different mentorships and, shorten the learning curve. And once I started, getting into the right mentorships and networking with the right people, things just kind of, came together. I was able to gather some information, create a niche for myself, and then things really started to take off from there after I created a niche.
So, you say you got some education. What did you? How did you choose what to educate yourself with, and what was your first deal? How did you? What strategy did you use for your first deal?
So, as far as where I educated myself, I commonly tell people, I probably fall under that seminar junkie, individual. I went to a bunch of different seminars, anywhere that I could find people that were actively doing real estate or at least talking about real estate. I was, flying around the country to get into those rooms, meeting those people, and believe it or not, I did networking and showing up to events for probably the first 18 months, maybe even 2 years before I actually took action. And then after that time, I was able to use the compound effect of the different relationships and the different knowledge that I had gained. Because as you know, there's many different avenues in the real estate space for you to
Sure.
choose from. And I share with people, because there's so many avenues, you got to pick one and stick to that avenue, or else you'll be, trying to figure it out 10
Right.
years from now.
So you mentioned your niche. What niche did you decide to go with?
So my niche, as you probably see on the screen, is foreclosures. I specialize in foreclosures. One of the questions you asked was, how did I do my first deal? The first deal that I ever did was a friend of mine, actually, who bought a home. They were in the military. They used a VA loan to buy a property. And then less than 18 months later, the military was moving them to another state, and they bought during COVID. So during those 18 months, their property value decreased about $20,000 from what the loan they had taken out. And for us
Sure.
that are in real estate, we know just because the value of the home drops doesn't mean the mortgage balance drops. Uh,
Right.
so they had a negative equity property where they would have had to bring money to the table to sell, meaning, people that are in those scenarios, they've got to actually write a check in order to get rid of their home. So
Right.
I was able to come in, share a strategy called Subject to, where I was able to take over the property with the existing mortgage in place. And then what I did was I actually sold that contract. So I put it under contract. I sold that to another investor, and I made my first $8,800. November 20th of 2023 was actually my first deal that I had ever done.
Congratulations, dude.
Thank you. Thank you.
So, am I to assume that through these webinars and or seminars that you went to, you gain enough knowledge to understand how to um, navigate a foreclosure? Because I mean, some people that are watching this may have never, they don't even know where to start. So, how would you go about stopping a foreclosure, or even, like I said, even identifying a property in foreclosure?
So, I mean, first, it always starts off with identifying a property in foreclosure. Most people don't know that every foreclosure is actually a lawsuit. So, anytime that you have a legal obligation to anything, a mortgage, your county or federal taxes, or even the wonderful HOAs that we all know and love,
Hmm.
once you stop paying them, they file a lawsuit against you to try and recoup their funds. Once they file a lawsuit against you, then that becomes a property that's in pre foreclosure. Because they filed a lawsuit, or the proper term would be a lis pendens. Once they file that lis pendens, that filing becomes public record. So anybody that's not paying their mortgage, not paying their taxes, or not paying their HOA dues, that then becomes public information that's recorded on public record, and you can pull that data from public record either by having somebody that pulls the data for you, using different softwares. They have free software and paid software. Auction.com is one that I tend to give people that's for free. PropStream can also, which is one that's for paid, very low amount, but still a paid service where you're able to pull that information directly from PropStream. If you're like me and you didn't want to pay for the data, some states and even some counties are more uh, forthcoming with that data, and you can go to like sheriff sale websites to get that information for free. And you can also contact realtors in the area, and a lot of them will pull that data for you for free. So it's about who, not how, at the end of the day. Align yourself with the right relationships to be able to get that information.
And have in your journey of helping people with foreclosures, have you ever dealt with a foreclosure attorney?
Yes, I've dealt with several foreclosure attorneys. I've hired attorneys to help clients of mine. I've dealt with foreclosure attorneys. Some people call them attorneys, some people call them trustees. Most of the time, they are actually a trustee, because most banking institutions are actually a trust. We know them to be a bank. In all reality, they are irrevocable trust entities that trade securities, which is what a mortgage is. That's a security. I know that's some, real estate lingo. So if anybody is watching and doesn't know what a security is, well, the good thing is we have the internet, we have Google, and we have AI. So, they can all help you to kind of figure out what that is.
When you identify a property that's in foreclosure, um, what options do you share with the current seller to help them while they're in foreclosure?
So what we do first, you got to identify a property, then you've got to identify the owner of that property. Once you identify the owner of the property, you have to get in contact with that owner. That's commonly referred to as skip tracing. Once you've identified the property, you know that it's in pre-foreclosure or a foreclosure status, and then you've identified who actually owns it, and you get in contact with them. That is the first step. A lot of people automatically assume that that homeowner is a seller, or that they want to walk away from the property. We take a different approach. We call homeowners, and we're offering them options to be able to stay in their home, and acting as a consultant through our company, Nationwide Foreclosure LLC. Some of those options may be simply just to reinstate the mortgage, meaning you're $5,000 behind. If you've got 5,000, you can just pay that $5,000 to the bank, catch up your mortgage, and they'll dismiss the lawsuit and allow you to stay in the home. That would be considered a reinstatement. Average Americans don't even have $1,000 emergency fund, so they probably don't have the money to reinstate. Then we start looking at other things. Do they have friends and family that they can borrow money from? Do they have a retirement account, maybe a 401k or an IRA that they can leverage to reinstate the mortgage? Were they in the military? Do they have a TSP, which is similar to a 401k or IRA for our veterans that are in the military? Do they have some sort of cash value life insurance policy? Maybe they have a indexed universal life or a whole life policy that they're able to borrow from and leverage those funds to reinstate the mortgage. If not, depending on what type of mortgage they have, my favorite mortgage in the world is an FHA mortgage. Depending on what type of mortgage they have, each mortgage has different options built inside the mortgage. Another common thing that we see is people doing a refinance or a loan modification to change the terms of their current loan so that they can wrap whatever payments they've missed into a new loan and still keep the home.
So what's the next step after that? Let's say they don't have they don't have the money themselves. They don't have family that can help. They can't take a loan out to cover that, because of course either it's lack of income, or DTI too high, or credit score so low because of this foreclosure that's pending. What would be the next step? What's another option you would offer them?
So, for instance, why I said my favorite loan is an FHA loan, most people don't know this, but FHA loans have a 30% entitlement built into the loan. So, if you go get a $200,000 FHA loan, there's a $60,000 entitlement balance sitting on that loan that says if you ever fall behind or your taxes and insurance increase, and that causes your payment to go up, you can leverage that $60,000 entitlement balance without having any money of your own, without changing your interest rate or even changing your monthly payment. And you can utilize that safety fund to be able to cover whatever you are behind on the mortgage up to that 30%. We like to use the $200,000 number because most homes, the median price in certain areas is 200,000. There's places that have lower property value than that, but average around the country you're going to see minimum of a $200,000 loan or more. And as long as they don't exceed that 30%, they don't need any money or even a good credit score to qualify for that program and be able to reinstate the loan that way without ever even actually spending a single dollar of their own money. They just have to know who to speak to, how to speak to them, and they have to have an FHA loan. This is only for FHA loans currently. It used to be for veterans as well. Unfortunately, the Veteran Affairs has suspended the ability to leverage that sort of product with VA loans.
Gotcha. And how does somebody who's going through foreclosure actually access that? Do they call the bank? Do they do a form online? How does that usually work?
So everything in foreclosure starts with speaking either with an individual like myself that understands what's going on, or reaching out to your bank directly. Most people, when they get in trouble, the first thing they do is ignore the problem, or we call it burying their head in the sand.
Right.
That's the worst thing that you can do, is not open the mail, not ask for help, not talk to anybody. But you can speak to the bank most of the time. I don't like to speak ill of the banks, but most of the time the banks are not going to give you this option because they'd rather you refinance the loan. So if you have a 2, 3, 4, 5% interest rate, and the interest rates today are higher, instead of the bank allowing you to keep that interest rate, even though it'd be more beneficial for you as the seller, the bank looks out for their best interest. So they don't tell you about these programs. They'll generally tell you you can submit a mortgage assistance application. They'll review the mortgage assistance application, which does require you to show that you can make monthly payments. And once they review the mortgage assistance application, then they will generally tell you if what they're going to offer you, and you can either accept or decline the offer. And the beautiful thing about that is once you submit that application, as long as they've allowed you to submit the application, there's some time frame in there, but as long as they've accepted and allowed you to submit a full application, they will temporarily postpone any foreclosure until they have given you an answer, rather that's an approval or a denial.
Okay. So let's say I don't have a FHA loan, I have a VA or a conventional loan. What would be my next step, or what's my next option?
So if you don't have an FHA loan, you've got a VA loan. They did recently have the VA SP program that has since ended. They ended that program. So right now, really, your only options would be to reinstate the loan or to do a loan modification. Most people in foreclosure can't qualify for a loan modification because the missed payments have destroyed their personal credit, and your personal credit is something that's needed in order to get a new loan. So if you can't refinance, you can't get a loan modification, you don't have the money to pay it, you don't have any friends or family members, your next option is that you're not going to be able to stay in the home, and you need to come to the realization that you're not able to stay in the home and then take the next steps. The next steps would be to list the home on the MLS or with a realtor. They have flat fee services, or you can, deal with the specific realtor that can list it, keeping in mind that most homes can take anywhere between 90 days to 6 months in order to sell. So you want to keep in mind that time frame. You can do what's called a short sale, where you tell the bank, hey, the property is not worth what you're asking me to pay for it, and therefore I'd like you to give me a discount. That's an option for you. Or you can sell to a cash investor that will come in and pay off the mortgage, take ownership of the home, and put some money into the homeowner's pocket and allow them to start the next chapter of their life. They don't get foreclosed on. They're able to start the next chapter of their life, and that investor then comes in and now they own a home and they use it for whatever exit strategy that they're going to use the property for. Rather, that's going to be something for them to live in, a rental property, or some sort of investment property. Those are generally the options that most people will give. For us, we actually own a credit repair business as well outside of foreclosures. So we tend to take on a client. The moment we take them on, we also put them into credit repair. So if they've got time before the foreclosure, we can start to repair their credit, which will then allow them to be eligible for a loan modification or a refinance if the credit was the only issue. There's a lot of other things you need, like debt to income ratio. They also have to show, income to be able to pay the mortgage. But if they can show the income, if they just need to reduce their DTI and get their credit score up, as long as we can buy them some time, then, we can do that as well. Something that we never advise anyone to do, and we're not attorneys, we do not provide legal advice, but something that we've seen many homeowners do is leverage a bankruptcy filing as well. Bankruptcy filings will buy them time and stops all lenders from being able to legally foreclose on the property. It puts an automatic stop to all the foreclosure action, and then they have to submit a bunch of documentation to the court and actually show up in court as well. You can do a bankruptcy filing with a bankruptcy attorney. You can also do what's called a pro se bankruptcy filing, which means basically you're representing yourself and you're not paying an attorney, and you just pay to file the paperwork with the courts.
Gotcha. So you mentioned that your first deal was a subject to. Can you kind of share with people how that would work and how that benefits um, the seller or the person that's going through foreclosure?
So essentially, in a Subto transaction, if someone's going to buy it, subject to just means they're buying the property with an existing lien in place. Most traditional transactions, they require all liens to be paid off before you can buy the property. A subject to transaction means that you're aware that there's an existing lien and you're buying the property while leaving that lien in place. How that benefits the seller or the homeowner at that time is now they're able to basically pass their responsibilities of payment to another individual that can afford to pay the mortgage. They're able to get some money in their pocket, in most cases, to relocate, and then that person continues to pay the mortgage that's in that original homeowner's name. Every time that that person makes a mortgage payment, it is reported on the previous homeowner's credit report that the mortgage is being paid. So that will increase their credit worthiness on that actual account. A lot of people will tell you that it will increase your credit score. We do not tell people it will increase your credit score, because if I pay your mortgage every month, but you're not paying any of your credit cards or your car note, you're not going to see your credit score go up. You have to
Right.
maintain all of the accounts on your credit report in order to see the credit score increase. But as long as that mortgage is being paid, whether it's by you or someone else, it will maintain a positive payment history on that specific account. And if you have positive payment history on every other account, then it will directly increase the actual credit score and show a better credit profile.
Awesome. So, I invest in foreclosures as well, and I know that depending where you are, the period or the time frame of the foreclosure is different. You you mentioned earlier that you do nationwide. How do you stay on top of, which period or time frame that you're working with?
So, I mean, it's really about having systems and processes and having a team, having individuals like yourself. There's a lot of different people that invest in different markets. I don't know all the rules in every state. I don't know all the regulations in every state, but I have such a vast network that when I'm able to locate these scenarios, I can get somebody, on the line. I can give them the basic, knowledge that applies no matter what state you're in. And then I'm able to kind of tap in to individuals like yourself, in different markets, to see what's different in every market. For instance, I started in the state of New York. That's a judicial state. They can be in foreclosure for 2, 3, 5 years before the home is actually taken. I now buy properties in the Texas market. I've seen people get foreclosed on in 21 days in the
Yeah.
state of Texas. So it really just depends where you are and having the right people in your network. And I mean, back to Google and AI. Google and AI is your best friend. If there's rules and regulations in place, AI can do a lot of that work for you to tell you, what the rules are, what the regulations are. If you're going to use AI, disclaimer, please make sure that you're getting accurate information. Do not only rely on what ChatGPT or Grok or any of these other artificial intelligence platforms are giving you. They are, they can provide a lot of substance, but they're not always 100% correct. And rules change every day in this industry. So something that could have been correct last month could have changed, this month. So you can use them for a base, but you really want to be dealing with, experts in the market that foreclosure is in, to make sure that what you're getting yourself into, and you're not over promising and under delivering.
Awesome. Anybody who's been investing in real estate always has a good and a horror story that they've experienced in their journey. Can you share your good and bad story with us?
So, good story for you. I bought a home I did my first deal, which was a wholesale deal, meaning I needed no money. I needed no, nothing. I had 3 bank accounts, $300 negative at the time that I closed my first deal. So I was $900 in the negative, closed my first Subto deal. I made $8,800. If you know how to do math, my bank account wasn't in the negative anymore after I closed that first deal. 30
Nice.
days after that, I actually bought my first buy and hold property that was in foreclosure using the same method. And when I bought that property, we took the property over. They had about $90,000 on a mortgage. They were about $40,000 behind, and their base mortgage left after they caught that $40,000 up was $50,000 at 3.1%. The house was worth about $220,000 at that time. I came in with a private money partner. A lot of people here, other people's money or private money partners. I brought a private money partner in. We were able to reinstate the mortgage, meaning my private money partner paid the $30,000 to bring the mortgage back current, and I was able to give them 50% equity in the deal. So they brought the mortgage current, and we also gave the seller $5,000 at closing. What we negotiated was, we'll give you $5,000 at closing. We'll give you $250 a month. This was an individual that was working full time and did not want to keep the home. They just wanted to be over and done with. So we gave them $5,000 at closing, $250 a month for 5 years, so that they would get a total of $20,000. We reinstated the mortgage, took over the remaining balance of that mortgage of $50,000 at 3.1%. This was December of 2023. So as many people that are in the industry know, interest rates were at 7 and 8% at that time. So taking over a 3.1 interest rate was amazing. And we walked in to over $150,000 in equity the day that we closed that deal. I'm now actually scheduled to sell that deal, or sell that home. I held it for 18 months. I'm selling that home next week to one of my best friends that I've been friends with for over 17 years. And I've now been able to help them buy their first home and walk into home ownership.
That's awesome, dude. So what about your ugly story?
So the ugly story is, we've recently, actually, this happened to us over the last 30 days. We dealt with a homeowner in the state of Pennsylvania, and the homeowner called us literally the day before the auction. We filed, paperwork that we normally use to stop the foreclosure. The homeowner refused to file bankruptcy. They didn't want to file a bankruptcy, which, generally stops all auctions. So we used a different model. We do leverage consumer law, Fair Credit Reporting Act, Fair Debt Collections Practices Act, things of that nature. So we use some rules outside of real estate law as well. And the bank simply refused to honor any of the paperwork that we sent in, and basically told us, too bad, so sad. We received your paperwork, but we proceeded to auction the home off anyway. And the only way you can do anything about it is if you're willing to go hire an attorney and sue the bank for a wrongful foreclosure. If the person couldn't reinstate their mortgage, they definitely cannot afford a attorney that specializes in one area, being, wrongful foreclosures. And since it was not our home, we did not have the legal authority to sue on behalf of the homeowner. So that homeowner actually ended up losing their home. and now has to, relocate from their home and lost the equity that they had in their home as well. So the biggest thing that I tell people in foreclosures, regardless of what state you're in, a judicial or non-judicial state, is time is always of the essence. If you've missed a mortgage payment, if you've missed your tax payment, if you've missed your HOA payment, the moment you know that you're not able to make those payments, you need to start reaching out for assistance immediately. Don't start waiting until you get the letters in the mail. Don't start waiting until somebody comes and posts something on your door. You need to reach out immediately and get things taken care of. Because if not, you're going to end up in one of those scenarios where it just becomes, too late to do something, or you're not willing to do what it takes to stop the auction. And if you, as a homeowner, aren't willing to work with a professional and take the advice, or with the attorneys and take the advice to do what's needed to stop the foreclosure, you're going to lose the home. You're going to plummet your credit score. And then now you're even going to have difficulty renting a home, because they're going to see you have a foreclosure and they're going to see that you have a crappy credit score. Foreclosures means you don't pay your bills, and so does a crappy credit score. So now landlords don't even want to give you a place to live because they don't know if you're going to pay.
Yeah. Understand that. Well, especially being a landlord, looking at potential tenants, that's one of the things I look at is like, are you going to be someone who pays on time, or am I going to have to keep chasing my rent every month so I can, what's the word I'm looking for?
Vouch for that.
Vouch for that. That's a good, good word. Good word to vouch for that.
Yeah.
But Tasheen, if somebody wanted to follow you on your journey, or if they wanted to reach out for foreclosure help, or maybe they want to partner with you, how could they do that?
So they can always reach out to me a couple of different ways. They can follow me on social media. My name on here is my name on Facebook. You can also find me under that name on Instagram. My Instagram handle is Tasheen _ humanity. We're all about helping people, hence the name on Instagram. They can also go to our website, Nationwide Foreclosure LLC.com, and they can, submit an inquiry, and we will follow up with them as well. So they can reach me on our website, they can reach me on Facebook, they can reach me on LinkedIn under my name as well, or they can reach out to me on Instagram.
That's awesome. And for the audience, don't worry about it. It'll be all in the description, so you don't have to write it down right now. Tasheen, thank you so much, man, for spending time with me, sharing those nuggets. I mean, even as experienced as I am, I learned some stuff, especially that FHA little little safety net that they built into it. I didn't know about that, so that's a nugget that I took away from this. So thank you so much for your time and all those nuggets. And for the audience, thanks for spending this time with us. Go to his Instagram, like it, follow it, um, watch it, take notes, and if you like what you heard, like and subscribe to the channel. Again, thanks,
100%.
Machine. Appreciate you.
Thank you for
Have a
having
great one,
me, and
guys.
thank you for doing what you do.